Broadcast. Welcome to the 32nd episode of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news.
Brother.
I am Joe Nikruto, and this is...
And I'm Dan Hussey, everybody.
Hello, everybody. Welcome. 32 episodes. That's 8 times more than listeners we have. 4 listeners, 32 episodes. Each one of you guys got 4.2 episodes. You're welcome. Before we start today, Dan, I want to, a serious note before we start, I want to let everybody know that if you are interested in hearing about grain market movement and strategies, daily, you can sign up for our Ag Hedge hotline hosted by expert market strategist Ted Seifried. It's totally free, gives you the chance to connect with us personally if you have any specific questions or any specific questions about the markets or agricultural commodities in general. If you are interested in learning more about how these prices work and how to make them work for you, it is a perfect way to take that first step. Link is in the description below. Sign up for that, totally free, zero commitment. Dan, that's why we like it.
Best price in the world right there, everybody.
What do we got going? So this week, we personally don't have much going on.
No.
However, there is a minor event taking place next week in the United States.
I don't know if you've heard. Just a little thing.
All 4 listeners, we are not saying that you don't remember that there's a presidential election next Tuesday, right? Presidential election. We were just talking before the podcast, trying to say, man, what's going to happen? And Dan thinks he knows.
You know, I do want to make one little jest here at the number of pamphlets and mailers I've gotten this year. Holy cow. You'd think in 2024 we would have gone a little more digital or been a little more environmentally conscientious. The number of trees that ironically Democrats have slain to send me pamphlets. I have not gotten a single mailer from a Republican. I have gotten, I kid you not, probably a stack this high of not only repeated from several people, the same person sending me ones over and over again in different various sizes, you know.
I hope those pamphlets are sustainable.
But the amount of money being spent on this election cycle is wild, right? And so all those advertises, everything, pretty crazy. So if you didn't know it's coming, you really must have been living under a rock.
Here it comes. Get ready. And so what we think that means for agricultural markets, Dan and I, a little bit of discussion. I'm of a mind that no matter what happens, no matter which way it shakes out on Tuesday, we move to the center, and that ag should be safe. But there are some considerations. Talk of, Dan, we were talking about tariffs, the possibility for tariffs, the fact that folks on the Democratic side seem to have a plan, but don't seem to be executing the plan, or we're not getting information.
Or there's proverbially balls and chains that hold, right, those types of legislations back, right? Other things attached. Things don't come without a secondary alternative or ulterior motive.
Might be a better way to say that. Sure. Just another opportunity for me to complain about you and I showing up early in the morning at Commodity Classic, waiting for the big announcement.
Perfect example.
And there was no big announcement,
right?
And we're still mad about that.
Right. I mean, and that was, 6 months before the election really came to fruition. But the truth is that nobody, I feel like in any of the 3 and 4 letter institutions, or any, analysts that are willing to stick their neck out and really, call it as you will, because there's so much uncertainty. And with a new administration is going to come new policymakers and new 4-letter institution regulatory authorities. So lots going to change. Policy changes. And when policy shifts, everything we are thinking and building might have to change as well. Yeah. So, I mean, like you said, tariffs, possibility on the Trump, winning. That he's used that as as part of his playbook in the past. We'd like to think agriculture is off the table, but we just don't know. And that uncertainty, guys and folks, girls, everyone watching, that's what causes volatility in the marketplace and the need to manage risk and the need to mitigate that risk, which is what Joe and I are here to help you do and hopefully wade through that storm together.
Absolutely. Should we jump into the news?
Let's do it.
USDA confirms first U.S. case of bird flu in swine at Oregon backyard farm.
So this is jumping to a new animal. This is the first time in hogs here.
Is that why this is important?
It sounds like it.
Is that why it's making me hungry? Oh, that's all I'm talking about. Making me hungry. USDA confirms first case of bird flu that jumps into swine at an Oregon backyard farm. Todd Neely from DTN is going to tell us all about it. The USDA National Veterinary Services Laboratories reportedly confirmed one case on October 29th in one of 5 pigs in a backyard farm in Crook County, Oregon. The Oregon Department of Ag announced last week that the county's first case of bird flu was detected in poultry. Livestock and poultry on this farm shared water sources, housing, and equipment. And so biosecurity, backyard farm,
right,
not things that usually...
in full production industrial farming today, right? Those are things that there are hygienic reasons that things like that don't exist. In your backyard farm, I'm not going to,
And what I don't know about this can fill volumes. I promise you that. So let me keep 100%. Reading. The livestock and poultry on this farm shared water sources, housing, and equipment. USDA's Animal Plant Health Inspection Service said in a news release. In other states, this combination has enabled transmission between species. Although the swine did not display signs of illness, the Oregon Department of Health and USDA tested the 5 swine for H5N1 out of an abundance of caution, and because of the presence of H5N1 in other animals on the premises. Okay, makes sense. The swine
were euthanized. This is the part that gets me.
The swine were euthanized.
Didn't show any problems or symptoms, just had a disease. Gotta kill the damn animal. Are you kidding me?
The swine's like, no, I swear, I'm fine.
No, I don't got it. Just give me a week to recover. Please, no. 14 days to flatten the curve.
We're probably going to edit that out. Okay. The test results were negative for the 2 pigs. For the other 2 pigs, the test results were negative for 2 of the pigs, and test results are still pending for the 2 others.
And they're dead?
No, they're not dead. Those guys are still, I think. Maybe we'll find out. There is no concern about the safety of the nation's pork supply.
No kidding. We're just killing the
unless
pigs.
You're that one pig. USDA said on Wednesday, USDA said it is conducting the investigation along with local and state officials and would provide updates when they become available.
So as these things develop, we don't mean to make light of any time of the H5N1 virus or it hopping to a new animal, right? But because that does represent a change of the status quo, which otherwise was a bunch of cows across the entire country have gotten this thing, and it's been a nothing burger story.
Or a change in the testing.
Right, but certainly. But this obviously changes the story a little bit. Does it threaten the nation's hog, herd and supply? Let's not jump to conclusions yet, right? It seems like the piggies got better. Again, the euthanization of the euthanized, the need to euthanize them, I feel like is a little extreme when this has proven to be nothing more than, a case of an itchy eye. But, okay, it is what it is. And the story, if it doesn't develop into more, we can forgot it ever happened.
Again, we make light. We don't mean to. We know it's serious business. But we know a lot less than these authorities.
And in other news, the ag economy is in a recession, says the majority of ag economists. I have to ask, who are these ag economists? Because we certainly weren't asked. But from agricultural.com here, more than half of the 70 agricultural economists surveyed in Farm Journal's Ag Economist Monthly Monitor believe that the United States agricultural economy is in a recession, while 75% of those economists surveyed think the ag economy is on the brink of recession. Farmers are seeing heightened volatility in commodity prices as harvest season progresses. Farm Journal's Tyne Morgan reported 75% of economists who say the agricultural economy is on the brink of recession is up from 56% who responded that way the previous month's survey. It's not clear that all economists are in agreement, but when asked to expand on why, economists did say that the cost price squeezing facing the crop sector is severe and will have larger implications if it persists. Many crop producers are profitable in 2021 and especially in 2022, so they had some ability to absorb the more challenging environment over the last 2 years. But that ability has run out, especially for producers who rent much of the land they operate or who are heavily indebted. Well, yeah, with a rising interest rate as it's been over the last couple of years, the cost of that loan has risen. The farm structures across all farms does not suggest a recession. A higher portion of farms have off-farm income to support cyclical changes. Most farms have healthy balance sheets thanks to increased land values, and there are positive returns in certain sectors of the industry supporting those that are diversified. Areas of the ag economy that will struggle are those that are highly or fully concentrated in row crops, are full-time commercial operations between 1,000 and 2,000 acres, and have high proportion of cash rented acres. I'm sorry, did they not just describe 90% of the farmers? So everybody?
Yeah.
Okay. In addition to the agricultural economist, Agri-News' Eric Quinlan reported at the end of last week that farmer sentiment about the ag economy reached its lowest level since 2016, and that continued to drop. The barometer reflects deepened concerns among farmers regarding expectations for farm income into the 24 and 25 marketing years. Yeah, no doubt low prices and high interest rates are going to do that in any economy. And you hate to hear the whole the idea that, oh, you're doing well because land values appreciated. Well, that doesn't help me on the, either the operating loan or, meeting any of the payments I need.
Commodity prices remain under pressure.
Right?
Commodity prices remain under pressure. Inputs remain elevated.
That helps the bank feel good about their business with me. But what good does it do me at the end of the day?
There again, serious situation. And it will be, I can't think of too many ways that irons itself out.
Well, you have to remember we've been here before, right? The last 10 years, right? We had a few years of really good production and good prices, and those, that bountiful harvest, so to speak, is over. Now we're going into that period of that crunch time, not only in the economy but generally speaking in ags. That 2015 through 2018, era. You hate to say it, but that's the nature of the business.
Tough business,
right? It's the nature of the business when we're really good at what we do, which is growing a really big crop.
Seems to be the case. Let's take a look at the numbers. How about Dees corn for the week? We opened at 413 1/4. The high was 415 3/4. The low was 409 1/4. Last trade I saw was 414 3/4. Down about a half. If you want to talk about a market waiting for new information, there's your corn market.
Yeah.
Your range there from high to low, what is that, about 6 cents, give or take? I mean, that's just ridiculously tight weekly action. That was down a half for the week. Funds, as of this morning's estimate, short 72,000 contracts of corn. That number got bigger. That's interesting. I'm not sure, Dan, what to say about this. We're hanging out.
It's a 6 cents range until it's not, right?
We're hanging out above the moving averages, aren't we?
Not in. Yeah, well, I mean, I guess we are. I don't know why all of a sudden I have a December 25 corn chart up in front of me. It's
probably the same story, right?
A little bit different, actually. We are below that 18-day and what's it called? 100-day moving average on that. And I can't remember if corn if it was back or testing into its 18-day today, but it had gotten back above it this week, which was the big win for corn, which is why there's probably a bit of that explosiveness to the upside. And genuinely speaking, corn was kind of our, I felt like the leader today. Unfortunately, right, it fell back into yesterday's trading range. We wicked back down, and I feel like the rejection by both wheat and beans at highs of the day, corn just couldn't kind of ignore that. And I feel like that was the big reason corn got hit today, but we'll see.
For sure. Beans opened the week at 995 1/4. These are Jan beans on this weekly update. High 1008 3/4, low 977 1/4. Last trade 993 3/4. Even though that was well off the lows, still well off the weekly lows, still down 3 3/4. Funds are short about 66,000 contracts. We're above the 10, but below the 18.
Yeah. And
constructive?
I don't know. There was a rejection, I feel like that just like a week ago that we had and closed kind of with this doji back below the 18-day and a chance to move back above it. If we retake that, right? Back below the 18-day where we failed below the 18-day, we're above that 10-day. But that we're trapped below those two. Yeah, I don't know.
If we retake the 18-day.
If we retake the 18-day, which is basically Jan Beans needs to get back above $10 at this point. Let's just call it $10. get back above $10 and you're we're back in business. But while we're below, I feel like the path of least resistance for lack of a better term is to hunt out potentially a new contract low, flush the book to the downside, capitulate perhaps, and then have a true harvest low and be done with it, wash our hands, and we can rally back up to that 200-day and get back above $11.
Meal and oil, I pulled up January. Both should still be decent. I caught that too late. I've got Jan numbers here.
I think it was about the same difference on the day, right?
Meal down near 10 on the week. Oil up almost 2 on the week.
Completely opposite directions, right?
We talked about this. Both of the funds long both of these, right? Oil share long. They're long 48,000 contracts of meal, long 52,000 contracts of oil against that short 66,000 contracts in beans, and the oil side of that working out pretty well. Wheat just for December, 564 and a quarter. We opened. The high was 580 and a half, low 557 and 3/4. Last trade I saw was 568. That was down 1. Funds are short 34,000 contracts of wheat. I'm not going to say that that's as close to flat as you need to be. That's not flat.
No.
That's short. They're short 34,000 contracts. Now, wheat hanging out below all of the moving averages, and that is not constructive.
And a trend line.
And
if you look at, you can even make an argument for that head and shoulders we talked about, which I could make a case, though, that like the right shoulder hasn't formed yet, and maybe a rally back towards $6 is necessary still. Okay. But we're below that trend line, below all those moving averages, right? Today was interesting. A down day for Chicago December wheat. It was a higher high and a higher low, though. For the KC wheat, I believe it was an inside day. And for the Minneapolis spring wheat, it was a lower low and a lower high. So you had all three of the wheat were completely mixed in terms of their candle today and their kind of their close.
That'll be the educational component of today's podcast. If you want to talk about the definition of mixed, that's it in wheat. So,
but it was a red day on a decreasing volume. I really think everybody is hurry up and waiting for something to happen. And I don't know, maybe this thing next week.
We don't want to put anybody on the spot.
Right.
But let me ask you, that's tremendously aggressively mixed in wheat with all three of those different types of wheat. What would cause that? What would you say? Position squaring?
Yeah. Ahead of
of next week?
Big thing maybe happening next week. Some guys at some funds thinking, hey, I might have some profits or I don't. But I got a position I want, right? Wheat might not be the thing that I'm normally trading, but I'm long 300 of them, and I should probably get rid of this crap, or before next week when gosh knows what happens.
Absolutely,
things like that, right?
Can we talk about cattle? How about live cattle for December? We opened the week at what I think I've got the writing of a medical professional, 188.
Sounds right.
72 and a half. We opened the high there, 189.80. That was not a bad looking high. Low 184.45. However, we closed at 185.92. Funds that's down 372 on the week, 372 and a half. Funds are long cattle contracts. That will be something that maybe we're going to repeat a couple times here before we stop talking about cattle. But just remember that the funds are long and this price action is beginning to deteriorate
and become bearish.
Last week, September. So this cattle chart, if you can picture it in your mind and if you have it in front of you, you
should see it on your screen now.
On a weekly basis, we took out all of the highs. We took out all of the lows for the last however many weeks.
Going back to January,
September.
Somewhere, right.
September, right? So these
in
contracts.
September, we took out, the lows going back to like December of last year. Here you go. That's December live cattle.
Yeah. So the last time
we were ever down here was like going back to 2023, December of 2023, a year ago. Right.
So this 184, we bounced off the 200-day moving average.
Bingo.
That's a bounce off the 200-day moving average.
Nailed it.
So the one thing I saw, an analyst from ADM called out today and said, look at the change from November 1 of 2023 to December 7 of 2023. And that was 21.27. You dropped 21 points from November to December last year. And certainly I'm not saying that we're setting up for that.
But if you follow that same, like if history repeats itself, it basically sold off from 190 down to 172.
The idea that we should be dragging our feet on getting stuff hedged.
No, but but to Joe's point, right? We had, and we'll pick up the point here in the feeder cattle as well. But we had a technical breakout occurring in the December live cattle that attracted liquidity and trapped liquidity. In other words, there were a lot of buyers that were buying that breakout that then now have gotten trapped and are now getting squeezed as we go lower. The feeder cattle never went up and confirmed this last run up, never broke that same trend line and rolled over as well, both below their 18-day. I mean, it looks like a market that otherwise traded to the high end of a range, and there's 20 handles to go to the low end now. I mean, so if there was ever a call, an opportunity, and a call to action to get hedging done or things done, that 18-day moving average to me is that signal that once we get and close below it, which by the way, we have on both the feeders and the fats in our leading months, it's a great opportunity. And your first signal to, hey, maybe get some things sold, a put, high and tight put in place up here to get yourself protected, because the chart could roll over and you're getting the first signals of, that it might.
1,500 pound animals coming to market. You've got tremendous weights. You're going to have a lot of need to find a home for that meat, and the cash meat market is also beginning to roll over.
A little softening there. We know, box beef cutouts, things have been really strong. Consumer demand is there, but I don't care about any of that, because Joe said something earlier about a certain somebody and their position in this market.
Funds are long.
The funds are long, and the chart's rolling over. That's all that should matter. That's all that matters for the short term.
If the funds head for the door, they're not going to be civilized about it. And that's the nature of cattle.
And cash can remain, at a massive premium to the board. And we see it routinely in cattle, so.
It's possible.
Watch that.
So, you know what, Dan? I don't know if folks can see this. You are employing it to great effect. I'm sure that
the Zaner Ag Hedge koozie.
That high-tech Zaner Ag Hedge koozie, which can be seen here, you can have. Tune in next week, all four of you. We're going to find a way for you to submit your information.
All four of you.
And we are going to send this to you in the mail, we think. Am I right, Carter?
Yeah.
Hopefully. Next week. Tune in and find out.
Check that Carter's going to have to cash.
Tune in and find out how we're going to send you this totally awesome Ag Hedge koozie.
Well, Carter gets his revenge.
Probably right.
Right now with their question of the week.
Oh, this dirty duck. We just talked about how we really didn't want to talk about it. Man gets to be a certain age, doesn't want to talk about it. But Carter forces the issue yet again.
What is a man of your age supposed to take?
When you're really old like you are, Joe, what do you do to celebrate your birthday? First of all, I don't think that's very nice of Carter. Second of all, the question says, what is your favorite activity to do on your birthday? Due to certain laws and regulations in the state of Indiana, I'm going to refrain from commenting. And I'm just going to pass this one along to Dan, because the statute of limitations does not expire for another. No, you know what? My favorite thing to do is to hang out with my family and eat pizza and let all the young family members sing at the top of their lungs, happy birthday. And that's exactly what happened. And I wouldn't trade it for the world. Thank you very much,
It's
everybody.
Funny how you get to a certain age and all you want is just nothing to do for the day.
Oh, no.
Right?
I got to be an old guy to use. That's directed to me?
No.
I'm just going to sit outside in my chair and watch the birds or something? I mean, what are you trying to say?
I'm a guy of a certain age that, seriously, the best activity on my birthday was just having nothing to do.
Is that what you did? Nothing?
It's just nothing to do, man. Just hang out with the kid.
Beautiful.
We just played all day, did literally nothing. That was exactly what I wanted.
When I was younger, I had interesting things to do.
So great.
Right? I could talk.
Sure.
Maybe its own podcast. But now that I'm old.
I'll tell you what, when you get to the point where you just want to do nothing on your birthday, I think it means that you have filled your cup and drink plenty. Right. On all the other occasions.
That is so funny.
Well, if you have just not had enough.
Not enough. I bet you have this week. I bet you have had it.
Right. But thank you for seriously listening and tuning into the Zaner MarketCast today. You can always follow us here on Facebook, on at Zaner Ag Hedge or on Twitter and LinkedIn at the Zaner Group. If you have any questions you'd like answered right here on the show, there's a link in the description to do just that. Just follow the instructions and we'll answer those questions on air. Thank you again. And hey, those 4 out there, no questions yet. Let's go.
Appreciate you.
And we'll be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops, everybody.
And subscribe.